What's up guys, my name is Hector. In this video I'm going to do a trade recap on a trade that I took on a 50K funding challenge for Take Profit Trader. You can see right here I made $234 on this trade. I traded MNQ, which is the mini asset for the NASDAQ, okay, in futures. Okay, so I'm just going to basically just kind of go about my understanding of what I was looking at in the chart, analyzing my daily bias, marking out my levels, and just kind of going from there as far as where I wanted to execute the trade and exit the trade. So the first thing that I want to do here is kind of analyze my daily bias for the day. As you can see, the market is relatively consolidated, but when you go to the higher time frames, it is very bullish. Okay, so just by casually looking at the higher time frames, it is bullish, so I would just feel more comfortable taking a buy in this current market. I zoomed in to the day of this trade. Point of reference, these blue highlighted areas, each one is a new day, New York market open. Okay, so this is when I take my trades. So zooming out, I just saw a lot of support being set up right here, right? Support. Price came, took out liquidity of these levels, and then reversed back up. We had this huge leg up. And then we had sort of these swing highs up here. Okay, so that I knew that price eventually wanted to get back up here. I would like to see price get up here after seeing confirmation of price holding and then continue to push back to the upside. So overall, I was at a daily bias of bullish. Okay, so I was looking to buy the market on this day. Okay, so the first thing that I do is I mark out my previous session lows and highs. So I trade New York market open. I'm going to mark out the highs and lows of Asia and London. So we're going to do that right now. So Asia lows are down here. Asia highs were about right here, right before London open. Then we had London highs right here, and we had London lows down here. These areas are very important. Every single day, price is going to move in and out of these areas. Not all at the same time. We don't know which one's going to get hit first. We don't know what direction it's going to go first. But once price gets to these levels, price is going to take out liquidity at these levels, and it's going to do one of two things. It's going to continue to push in that direction and take out other levels in that same direction, or it's going to reverse once it gets to one of these key zones, right? 1, 2, 3, 4. Once it gets to one of these key zones, it's going to hold, and it's going to continue to push in that direction. So it's going to continue to push in that direction or reverse and then go in the opposite direction to take out other important levels of liquidity. Like I mentioned, our daily bias was bullish, so we're looking for buys. This happens, you can backtest this. Market open New York, price loves to manipulate and take out a key zone of liquidity. In this case, right, so this right here is New York market open. This candle that flushed down, okay? What did it do? It came down and it took out London lows and manipulated that. So what is it going to do at this level? It's going to either continue to push down and hopefully take out Asian highs or Asian lows down here, or it's going to reverse, which is what it did, right? It came, it flushed down, it reversed, and then pushed back up and took out London highs. Okay, we can actually take this out. This is Asia highs right here. So this is another thing I forgot to mention. When price takes out a key zone, we can basically remove it from the chart, because basically we're no longer looking for price to be manipulated to those levels to fill orders. It's already happened. Okay, so basically London open took out Asian highs. So at New York market open, we had only London lows, London highs, right? London lows, London highs, and Asia lows. Okay, I did mark this up over here, right? Because this is an area of liquidity, a swing high, okay? And we're looking for, right, NAS loves to do this at market open. It flushed. Remember, our bias is bullish. Price flushed, took out this liquidity, so we can unmark that, and then it reversed and pushed up heavy. We had a strong bullish candle to the upside. So this is the next thing that you're looking at. Identifying after daily bias, right, market structure, you're looking deeper into the chart. You're looking at the candles. How strong are these candles closing in the direction where I think that price is moving, right? In this case, the price is bullish. Are they closing strong, which this candle did? So what did the candles do? Did they close Did they close strong to the upside? Did they push up strong and then reject and kind of wick out, right? So we want to basically look at the candles and understand that they need to close very strongly and positively in the direction that we're trying to trade. Okay, that's indication that price is very indicative of moving strongly in that direction at that certain point in time, right? So this was basically right at New York market open, flushed London lows. Then we had this strong bullish close. This is the 9 and 13 MA and the 200. I love seeing price. This is another confluence. I love seeing price respecting the 9 and the 13 MA and then continuing to push against it. So we took our trade right here at that break of candle. We put our stop losses around there and we got like a 1.5 right here. We basically got out right here. Why did we get out right here? We didn't get out at this candle. We got out like over here where price started to reject. And actually it was a good exit because price continued to come back down and then take out New York open liquidity, okay, right here. So what are we looking for in exit strategy, right? Because the exit is just as important as the entry. A lot of people, and I did this for the longest time, we enter, we might get lucky, or we analyze the chart correctly, the direction, the timing, but we have no idea when we want to get out, okay? So you want to look for areas of key zones that are equal highs or equal lows. In this instance of buying, we're looking for areas of equal highs. We're looking for gaps where price wants to go, be able to fill more orders and push in that direction or reverse and just fill orders in the market, okay? Equal highs is literally right here. What are equal highs? Literally areas where the highs or the lows are very close to each other. So this wick, this wick, this wick, literally all right next to each other, okay? Right here, right here, right here. So price eventually wants to come take out orders right here to continue to push up or reverse. In this instance, it continued to push up. So price took out levels right here. There's more equal levels over here. So see these two wicks right here? These are equal highs. And we have equal highs right here as well, okay? So price came and took out all these equal highs right here and right here. You could have held it, this is where basically you're looking at your exit and you're looking, okay, do I want to hold it to these equal highs, to these levels of high interest, high liquidity? Maybe they're gaps. Do I want to wait and take my exit out completely at that level, or do I want to take partials on the way up there? So somebody could have gotten in this with the intention of just getting out their entire position at this level. Okay, that would have been a great exit, or taking out partials, right? So these equal highs right here, you could have taken out partials right here. You could have taken out partials at these equal highs right here, and then you could have taken another position over here. Okay, and that was it. That was your exit, right? But what you don't want to do is try to shoot for the stars. Obviously, this is a nice level over here where price did come to, but look what it did first, right? Before it came up here and took out this swing high, it flushed and took out London open. So it would have taken us out. Like this was our stop loss, right? So it would have taken us out if we would have been greedy and held this, right? Which happens to so many traders. So you want to look at this and you want to say, okay, price is rejecting strong. It might come take out liquidity in the opposite direction. This might be a good place to get out. That's exactly what we did. We got out somewhere around there, 1.5. Obviously, ideally, a 1 to 2 or 1 to 3 is like the best risk reward ratio, but you got to take what the market gives you, especially if you got the daily bias correct and you understood your key zones, right? London lows, London highs, Asia lows, Asia highs. You understood that very well, and you understood where price was kind of approaching those levels and what it was doing at those levels. So if you understood your daily bias and you got that correct, and you understood your key zones where price needed to get to grab liquidity, and you were able to formulate an entry point, then we'll basically take whatever the market gives us, even if it's a 1 to 1, 1 to 1.5, 1 to 1.7, whatever. And we'll take that as a win. We'll take that as a dub because we did the hard part, and when we get it correctly, we're proud of the trades that we take, even if they don't go for the 1 to 2s and 1 to 3s. So that's it, guys. I hope you enjoyed this video. I hope it wasn't too confusing. Wanted to give you kind of a recap and kind of dig into my head to help you kind of understand what I'm thinking and what I'm looking at every single day when I'm looking to take a trade. So you can go and back test this yourself. NASDAQ, gold, Forex, stocks, whatever you want. Price at market open loves to take out some form of liquidity and then continue in that direction, or reverse and continue to take out liquidity in the opposite direction. And that's where we're looking to basically take an entry and make some money. Have a good night. Peace.